In stock investing, we want to find opportunities where the market reacts in a way that causes a stock to temporarily become undervalued. It's possible an opportunity has presented itself with Zumiez. Today on Stock Shock, we'll discuss what Zumiez is and how the business is doing in detail in hopes of saving you time and helping you decide if you want to do further evaluation for yourself. Zumiez started in 1978 in the Pacific Northwest, and they've been expanding across the US ever since. They're primarily based in malls and have recently been expanding into an online presence as well. Zumiez's focus is on the small niche subculture of action sports and streetwear. They're the leading retailer for clothing, accessories, and hard goods within that market, with hard goods being like skateboards and snowboards, for example. Their target audience is primarily teenagers and young adults, and their stores are organized to fit the feel of that target demo. Stores are typically under 3,000 square feet, and they have an organized chaos feel to them, much like a teenager's bedroom, I guess. With a lot of goods on display, crammed into a small space. Many locations have like couches or benches, and all of this is to encourage customers to spend more time in the store. Some of them even have video game setups. Because they focus on hiring employees who are very knowledgeable in this niche and they focus on promoting from within, they keep a stronger sense of atmosphere, knowledgeable staff, and thus a more loyal customer base. The average age of a Zumiez employee is 19. They also sponsor action sports events, concerts, and similar events within that target niche and demographic to grow this customer base and strengthen their perceived connection to the said subculture. Over the years, Zumiez has continued to just slowly grow market share versus their numerous competitors in the clothing space, while outperforming smaller skate shops in the skateboarding hard goods space, leading to many of those closing over the years. One reason for their success in the hard goods side of the business is because building your own skateboard and other hard goods is a very daunting task for some, especially beginners. So having a physical retailer who has everything you need in-house that can help you get on the right path or just outright do the build for you is extremely valuable. And that also helps customers feel a connection to the store and or the employees and leads to a higher chance of that customer being loyal long term. Store managers are even encouraged to stock specifically what local shoppers want and ask for. In 2012, Zumiez bought Blue Tomato, a leading European specialty retailer in this niche, and in 2016 they acquired the Australian retailer Fast Times Skateboarding. In their annual reports, management will often remark about not wanting to expand too much or too quickly, focusing more on reaching optimal store count for each geolocation and maximizing its profitability, integrating it into their online and omnichannel strategy. They want stores to also be fulfillment centers, which has helped them to be successful in the shift to online. Here's my example of how that approach works to enrich value for both company and customers. Let's say you buy a Santa Cruz hoodie from Zumiez website and you want it shipped to your home. If it were coming from their main distribution center in Corona, California, it can arrive in 10 to 14 days. But if a local shop already has it in stock, then they can get it to you much quicker and for about the same cost for both Zumiez and the customer. They've also started a stash rewards program, which is of course similar to other shopping programs, but where this one differs from most is that it offers exclusive items to buy and contests to win that fit within this subculture niche, like exclusive band merch, action sports brand merch, VIP meet and greets, tickets to concerts, tickets to action sports, things along that line. Zumiez online shoppers, Stash loyalty members, and app users help them gather data, which is useful for keeping up with trends or to test out new products. And for those who wish to still shop in person, since Zumiez has outperformed so many skate shops over the past 40 years or so, it's often now the only local option for many skateboarders. Moving into the present, Zumiez has 721 locations, 602 of those in the US, 52 in Canada, 54 in Europe, and 13 in Australia. They're really focusing on that international expansion right now. Over the next year, they intend to open 22 more stores. They've also started a delivery program where employees will hand deliver the items, which also gives those employees an opportunity for upselling. And it's getting closer to the same cost as mass delivery. It currently accounts for about 5% of all deliveries, and right now around 25% of their stores offer this option. Another reason for doing this though is to further create that sense of community between the frequent shoppers of Zumiez and their local staff. 39% of Zumiez revenues come from men's clothing, 19% from hard goods, 17% from accessories, 13% from footwear, and 12% from women's clothing. In 2020, during COVID, Zumiez second quarter revs went up 9.5% year over year, while some of its closest peers nosedived, down 15 to 17% over that same time span. Q1 2021 was huge for Zumiez. Revenues increased 17.8% from last year, which was admittedly a COVID year, and thus a lot of COVID-affected stocks are going to have inflated year-over-year numbers in 2021. So to offset for that, I will often refer back to 2019 numbers as well to kind of give you a big picture, longer term idea. Comparing 2021 revenues to 2019, they were up 14.7%. So that shows you the revenues weren't just up because of COVID, they've been up over the past 2 years. Management credits this phenomenal quarter to stimulus checks and a return to normalcy trend post-COVID, but they also do think that this is further evidence of their niche growing. And they accomplished these high revenues while a portion of their stores worldwide were still closed with COVID. Online sales were up 16.6% year over year and up 26.4% from 2021 versus 2019. To me, this in particular was very important that I wanted to see with Zumiez. When shoppers go online, they have a plethora of options, unlike the mall. And yet still shoppers use Zumiez online. And that shows that people like those specific products that are offered. And in this particular niche, that's a good sign because over time, Zumiez has put many local skateboard shops out of business. And online is where many who are deep in skateboarding culture go and support those smaller shops that are still around and have an online presence. And that was my initial worry in theory, was will Zumiez be sticky enough as more commerce shifts online? So far, that seems to be the case. International stores net sales were up 19.9% from May 2019 to May 2020. And up 54.9% from May 2019 to May 2021, which is a great sign for international expansion and its future. Evidence of their ability to sell a wide selection of items and brands, the 2020 10K showed us that no third-party brand accounted for more than 9.4% of net sales last year. This is a good sign that they should have staying power in the market, and more importantly, that they can easily transition as trends change over time, since they don't rely on just a handful of specific hot items. Now, if you're unfamiliar with retail stocks, I'll quickly explain an important metric you should assess to get a true grasp on a retail stock's actual growth and efficiency. It's called same-store sales, and it may also be listed as comparable sales. Same-store sales is how much revenue improved year over year at each location. It's important because it shows that sales are growing organically and are not being artificially inflated. For example, if stock A and B both have an increase of 5% revenues year over year, but stock A only had 1% same-store sales improvement, while stock B had 4%, well then stock B turned in much more impressive growth. Stock A likely increased those revenues to 5% because they opened many new stores last year, which contributed to revs, but not to same-store sales. Or maybe stock A could have made some acquisitions, which again artificially increased revenues. Zumiez same-store sales have increased every year over the past 4 years, even during COVID. Men's clothing is a very saturated business, but Zumiez is doing well. They've had better same-store revenue growth, revenue per employee, and revenue per square foot than most peers, while also being second in sales per square foot and CEO approval ratings. In that retail apparel space, they've improved from 0.6 to 1.0% total market share between 2016 and 2021. They often lead peers in revenue growth, net margin, ROE, ROA, ROIC, and book value per share growth. Looking over their trends and their margins, we see a common theme of decreasing returns between 2013 to 2016, which is when clothing retail as a whole was oversaturated and had a market downturn. But during that time period, Zumiez did have a small decrease in revenues, margins, and free cash flow, but they kept market share and they weathered the storm well. During that time, they did nothing crazy with debt or selling any shares. Speaking of debt, they have no long-term debt at the moment, and they sport the best current ratio and long-term debt to capital ratio amongst those peers. They even have $81.5 million in cash, meaning 8% of their market cap is pure cash at the moment. On top of that, their total current assets of $556.9 million are even higher than their total overall liabilities of $436. Zumiez does not pay a dividend, but they do frequently do share buybacks, including a newly announced $100 million buyback program over the course of 2021, which by my estimates will eliminate 9 to 10% of all shares if the average purchase price were around today's price of $42. Industry trends include back from COVID and back to school, both of which occurred last quarter and aided in that incredibly impressive quarter 1 they turned in. Skateboard sales everywhere are expected to grow at 3.27% CAGR per Bloomberg from now until 2025. And skateboarding culture is continuing to trend well just overall. One example of proof was over this past few months when skateboarding made Olympics for the first time and its high ratings numbers surprised everyone. Apparel e-commerce is expected to grow high single to low double digits over the next 5 years according to Bloomberg Intelligence, and Zumiez is doing well there so far as well. This will aid profitability for Zumiez and other retailers. So bears will argue COVID can easily lead to more closures for all physical retailers. And Zumiez' main distribution center is in California, which is cavalier in their quickness to do COVID shutdowns. Most of Zumiez' merchandise is from foreign manufacturers and thus can be hurt by risks in foreign trade and/or COVID supply issues. Clothing is and will always be a very saturated business to operate within, limiting the ceiling of margin potential. If one or more of the largest clothing retailers decided to heavily pursue this niche, it may take it from Zumiez due to the possibility of a larger corporation being able to offer lower prices than Zumiez can, requiring a lowering of prices on Zumiez' part, thus lowering revenues and margins. If the overall consumer climate changes due to macroeconomic downturns, apparel spending tends to drop more than necessities. And with Zumiez having 85% branded merch, they would likely have to drop prices more than some of the other more vertically integrated retailers. Potential raising of minimum wage would hurt Zumiez' peer group, and as we mentioned, Zumiez' average employee age is 19. One could argue that the improvement of margins Zumiez has seen since 2016 is only based on industry cyclicality. Bulls will argue that as peers go out of business due to COVID and competition, Zumiez will remain constant like they have been within their niche and with their well-managed business model. Online sales are doing well, and margin uptrends will continue as online sales grow. Their successful action sports culture image in their store layout, products, and staff is a valuable intangible asset. They're one of very few retailers who can create an in-store experience, which becomes more important as time passes and more sales are done online, and it's needed to differentiate why people should visit you in person. That may keep them in mall business and continue growing market share over some of the other peers in this space like Journeys and Vans, etc. Expansion internationally will continue to bring in revenue and profits and is a great opportunity for growth. One could argue that the improvement of margins since 2016 is also based on Zumiez management improving efficiency in operating margins and using stores as fulfillment centers and streamlining that omnichannel model. After my research, I felt like Zumiez has proven that it has a very strong likelihood of surviving the likely decline of mall retail, and that will continue to slowly play out over the coming decades. I feel confident that their approach of creating culture and sticky customers gives them a unique business model, and operating within a smallish yet dependable niche customer base will lead to them slowly gaining market share, while others who are less distinguishable from other retailers will slowly die out as they have been. And if I weren't confident enough in that in theory, the numbers have certainly proven that that's likely to play out. I also personally really like how Zumiez does store expansions only when it makes sense and they focus on maximizing profitability instead. Let's see how they're currently priced. They're priced quite low with a PE of 8.5, price to free cash flow of 6, price of sales of 0.9, and EV to EBITDA of 5.1. On each stock shock, I'm going to try to plug and support other financial YouTube channels I've found useful. Last time I did Everything Money. With Zumiez, I'm going to show you that this stock currently fits Phil Town's 10 cap rule, which takes maintenance capex and combines it with market cap and shares outstanding to give us a target fair value for a stock. To find out more about the 10 cap rule or other financial advice, go check out Phil Town's YouTube channel. Here at Teaching Wealth, I take the stance of never telling anyone what to buy, even to my friends and family members. I share these ideas with you only in the spirit of, hey, here's something potentially interesting, here are the numbers, here are differing perspectives, maybe you can do some digging and see what you come away with for yourself. So I won't tell you whether or not to buy the stock. I will tell you my assumptions that I used in my models and why I gave those assumptions. What's my fair value? And what margin of safety I personally would want to invest in this company. Revenue growth CAGRs for many retailers should be eyed with caution when looking at only the past year. As we mentioned, COVID caused revenues to dip for many companies, including Zumiez. Then they reopened and they're now going to post these high year-over-year percentages. So I can't really go off of just what's shown here as the last year revenue growth. It's unwise to project these numbers year over year over the next 5 years. So I'll prefer to use their 5-year average revenue growth. And then for Zumiez, I think they will be expanding further internationally, bringing in more revenues. However, they'll still see slight declines with the mall downturns longer term, and the stimmy checks are gone from teens' pockets now. So I'm going to go with a 6% revenue growth CAGR over the next 5 years. Zumiez has bought back shares over time with a negative 2.1% CAGR over the past 10 years and a 0.5% CAGR over the past 5 years. With that aforementioned buyback program, they'll be buying back around 9% or so in this year alone. And they also have a lot of cash on hand right now. With me doing a 5-year projection here, I'm going to say that a negative 2% CAGR is a fair overall assumption for 5 years from now. Clothing industry is macro cyclical. From 10 to 5 years ago, Zumiez had worse margins because of that industry-wide downturn, and then over the past 5, they've improved, but they've enjoyed an industry-wide upturn. So to offset for macro cycles, I'm going to average out the 10 and 5-year margins. But Zumiez' continual improvement in omnichannel operations and online sales will slightly increase them moving forward. I feel it's fair to assume that they'll improve from the current 5-year average when we look back in 2026, but not by much, because in their last earnings call they give guidance that margins will come back down from these insane 2021 highs that we see here, where they have double-digit profit and free cash flow margin. And that's because some of them were due to COVID changes like decreased physical store payrolls, traveling expenses, and training costs, and those will be coming back this year. So I increase margins, but only very slightly. Zumiez is trading at low multiples. Their 5-year average PE is 16.17, and the sector median right now is 16.32. I think a 10 multiple feels right for them 5 years from now, as their growth will be tapering down at that point, with likely still low single-digit revenue growth at that time. So at a desired annual rate of return of 10%, I get a fair value of 43.66 in my multiples model and 49.89 in a DCF. Equally weighting those will give me a fair value of $46.78. It's at this point I prefer to establish a margin of safety, which is based upon my confidence in my knowledge of the company, its industry, and any obvious risks. I feel like 15% is right for me on Zumiez, as I have a good grasp of the company, but with the industry and macroeconomic cycles being an omnipresent risk here, I think a 15% margin of safety helps me feel more comfortable. That would give me a target buy price of $39.76, just a few percent below where it's currently trading. So for that reason, I could sell puts at $40 strikes, which would give me break-even entry prices into Zumiez at below my buy target. In my personal trading plan, I look for puts that are paying me 12% annualized return while I'm waiting for the stock to hit my target buy price. Since I plan to buy the shares at that price anyway, this is as close to a win-win as you can get in stock investing, in my opinion. So if this sounds interesting and you'd like to research Zumiez for yourself, then I'll link some useful resources in the video description below. Come to your own conclusions, come to your own assumptions, make your own decisions. Good luck in building wealth for yourself and for your family.